All right, good morning, everyone. Let's get started. All right. Last night was a bit of a back and forth, obviously, after what was the most important day, I think, in U.S. markets probably in the last month or so. Was obviously the Fed coming out, releasing monetary policy, they didn't make any changes to the near-term policy, but they did, I think, without question, make changes to what the forecasts were, and I think that that's very important. It was interesting how the market actually reacted to it. We had a very quick knee-jerk reaction to the upside, which kind of consolidated from there and fizzled out a little bit, but surprising that we didn't see a little bit more, personally, maybe a little bit more of a negative reaction, as some people are still calling for 2016 rate hikes going all the way out until the end of the year. So, very interesting nonetheless. All right. What I think was important here is the dot plot. They keep talking about that, and essentially what that's showing is that's showing that the interest rates will likely have two hikes, 2 quarter-point hikes. That's what the average Fed member is expecting between now and the end of the year, and that's got to be, I think, a little bit more than what the market was expecting. One thing is they kind of maybe flattened their hiking forecast, which is maybe a reason why we started to trade to the other side. So I think that's one of the reasons why the market took it as a bullish thing. All right, moving on. In Asia overnight, China, that's coming off again. We had soft economic data in the property sector, and no new surprises. We continue to have soft data there for a long time, but Australia also down over 1%, the Nikkei down around 1%. I think a little bit of this is happening, maybe on the back of what we saw out of the States. But what's interesting is that we really saw, obviously we saw them talk about a probability of two rate hikes before the end of the year, a price in a probability of two rate hikes before the end of the year. That being said, we've got, we had the dollar that actually weakened quite significantly after the announcement. We had the market that actually rallied. So how much of this was already priced in? And that's really the thing. How much of Greece is priced in? How much of the Fed rate hikes priced in? It seems like it's all the markets have talked about for the better part of the last quarter. Okay, here's the dot plot that we talked about here, and you can see 2015. You can see at the end of this year where the main forecast really, the average forecast is at 0.75, which would be 50 basis points higher than where we are. So, that's still this year. That's what the market takes, is that two hike period, somebody all the way up here at 1.75. I don't know who's throwing that one out, but either way, I think that's significant. And you can see here, that was the previous, the person's forecast back in March. You can see how this is all consolidated, and the meat spinner is around 0.75, but even more people are actually all the way up at 1%. I think that's what's really important here. All right, moving on. No corporate action to speak of today. We've got a little bit of market data, retail sales out of the UK, and then the rest of the stuff's just out of the States. Current account balance, CPI. CPI, I think, is more important than it's been in a while. Initial jobless claims and leading index. All right, let's get into the maps. I don't have much for you to look at all today. The reason why being is, we've just been in sideways markets forever and a day. I mean, when you look at this range in the U.S., I think we'd have to look at this in terms of, I'd like to go back and do some research over the next couple days and see how narrow this range has been for so long. I mean, if we look at, let's just take into context this range here between 2040 and 2120. The percentage range that's in for, we're about 6 months into that range now, is quite spectacular. There's been, I can't remember seeing such a tight range for so long in and the S&P 500 or any other index for that matter. It's quite incredible, and it's getting tighter and tighter. I mean, we've been hanging in a 40-point range, which is 2% now, literally since the beginning of April. I mean, it's unheard of. So we're going on basically about to complete our third month, or getting deep into the third month of a 2% range in the S&P. That cannot last for much longer. I just can't imagine that it can last for much longer. And when we get a break out of this range, it's going to be, I think it's going to be meaningful. The problem is that there's been so many head fakes on the breakout here. We've talked about it before. It keeps looking like it's going to drop, doesn't drop. Keeps looking like when it takes out new highs, it has nothing behind it. And we continue to be in that cycle, and that's really what makes it so difficult to read the market at the moment and commit yourself. It's just not a trader market, but sometimes the best trade is no trade at all, and I think that's exactly where we've been. If you see in our local market, we've obviously have some big moves of late in terms of over the past 2 months, but we really have been in a really tight consolidation phase as well. Let's look at it more like that. I mean, in the last, I would say, 15 to 20 trading days, we've also gone into a much more tight band of trading range, and probably same sort of thing, about a 2% range. And so, like I said, you're getting involved right now, trying to predict where this thing's going, and playing breakouts obviously hasn't worked, but playing anything hasn't been that effective. We've just been in such a tight range that I think we need to wait for something compelling. We need to wait for a breakout, and we actually need to wait for confirmation of the breakout until we really jump on the back. Just a couple of the single stock plays I'll look at today, and I don't even want to bother getting into any more of it. One of them is Kumba. So Kumba really failed, I think. I mean, it didn't even really make a full attempt at 180 a couple sessions ago. It was up there pretty close. Didn't really make a full go of it. Yesterday, big reversal, and really closing, I think, slightly below what is trend support here, and potential for this thing to maybe come back down and trade toward the lows. And the other one that I want to just really have a quick look at here is Standard Bank, which has really been hammered off the tops. I mean, we were up around 177. We're within a spitting distance of 150, and really almost exactly where the 200-day moving average is. And if it gets down here in 2 days' time, for instance, it will be where the 200-day moving average is. So this is, I think, a monster level. I think it's definitely worth a nibble here on the first attempt at 150. You got to think that we're going to have a significant move to the upside after, if we get a nice test here at 150. And that's really all I want to show today, guys. Just be careful out there. Today's obviously closeout. The discount on the spread over the last couple sessions makes it very risky that we could see follow through on potentially on sell side in the auction basket. So just be careful. I think the market was positioned on the long side, thinking of a long side move before. Good luck out there.